And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, breaking it all down from a chart perspective, news perspective, any economic data that came through that we think is important, relevant, or interesting. We analyze all of it for you guys out there. And welcome back to our show here on a Friday. Earnings season is kicking into full gear this week. We've got a rash of bank earnings to analyze again here today. We've been looking at the likes of JP Morgan and Morgan Stanley and all those types. Well, today Goldman Sachs came in and absolutely destroyed it as well. We'll talk a little bit about the numbers, the takeaway from the chart as well. I've got Coach Frank and Coach Mark joining me here. I'm your host, Coach Tim. And let's bring the boys in one at a time right now. Frank, how you doing today on a Friday, sir?
Doing well. Excited to be here. A little bit grumpy because it's earnings season, right? That's just the norm for me. It was definitely a reminder. If you didn't remember it was earnings season, try scanning through the markets this morning. A lot of earnings are right around the corner. But out of that kind of pain in the neck window, we get into the fourth quarter, right? We get some clarity. I'm really excited about where we end up through this. So I'm just gonna march right through it. And I'm going to complain as little as possible about earnings. But other than earnings, man, doing well. Excited to be here. Excited to be with the team.
You know, by the time you look up and you get through a couple of weeks of earnings season, you got all these companies behind you and the opportunities open themselves up, Frank. And then the complaint is not quite as real, but right now it still is. There's a lot of companies next week, 100 companies on the S&P that report next week, like 160 or something like that the week after. So a lot of companies down the pipeline. We're just getting started here with bank earnings this week. Mark, how are you doing today, sir?
It's been a good week in the market, right? It's like, I oftentimes advocate having a diversified portfolio in case one area of the market's shaky, right? Have a little of this, have, some oil, some commodities, some gold, some silver, some Bitcoin. It's all working the last few days, right? It's been all working this week. So no matter almost where you're at, it's been a good week. So, it's good heading into that monthly option expiration. You get a little bit more for those covered calls if you sell them. Those naked puts expire worthless. You have less stress on the portfolio. It's a good end to, because some people judge things by the end of the calendar month. For me, the month begins and ends with the monthly option expiration. So it's been a good month. It was a good cycle this last
So on the Friday of expiration until the Monday of the new expiration, there's just a void of time there where Mark just gets to celebrate the fact that his options expired, right?
Yes, there was time. That time does not exist. That is when you do drunken orgies and
time is a flat circle.
Yes, it is just another void of celebration.
I got you.
All
right, let's get right down to business here. By the way, if you're out there watching the show right now, hashtag Team Tackle in the chat as we get the conversation started. That's our official hashtag at Tackle Trading. Always a great way to start our shows here on YouTube and in our webinars anywhere, really. And as we get going here, a couple things I do want to remind everybody of. Number one, Emily Mururi, the head of the Women in Trading Mastermind group and also the group there at Tackle Trading, they will be meeting tonight. Coach Emily, tonight, I want to make sure you guys know of that event, 8:30 Eastern. Do not miss it here on Tackle Trading. That's free for everybody. It's not a pro member account only. That's anybody who wants to come and join if you are a female. All right, let's rock and roll here, guys. Start with the S&P 500 and let's start with the technical response. We've been improving here for the better part of the entire week. As a matter of fact, Coach Matt has been breaking it down. Shoulder, head, shoulder, Frank, higher pivot low, and now we're pushing towards a technical breakout. A couple levels we've been tracking throughout the week, and then I want to get you guys' read. Number one, it started with this 43.65 breakout. Started getting healthy there as we were going into Wednesday and then into Thursday. It started to continue to run. We had a huge day in the market yesterday. We're continuing here today. We did catch a breakout at 44.20, different intraday level, right? But now we're pushing up against some other new resistance levels we got to pay attention to. Frankie, what do we need to watch on these charts as they're moving forward on the S&P 500?
Well, first things first, this is great development, right? This, and Matt's talked a lot about this pattern because this pattern has really, been money, right? That right shoulder where we put in that higher pivot. Love to see it if you are a bull. Probably not so much if you are a bear right now. I think our last real hurdle is going to be that pivot that we put in back on the 27th. at this point in time. Now, at this pattern, I'm not overly concerned about that resistance holding us down, although I will respect it as resistance because it did push us down before, right? And so I expect that as we're navigating through earnings, there may be a little bit of chop. That's always kind of my expectation. That certainly doesn't always play out that way, but I think at least as a directionally focused trader, it's good to kind of have that. There's a good chance it is going to be a little bit choppy from now till the end of the month, give or take. But I believe, just technically speaking, we're going to have that battle, and that puts us right about 44.75. 4,500. That's going to line up with that old pivot from or that old resistance level back in August. Same general ballpark. I don't really see anything. And then I put this on a weekly chart, and when I take myself out of the news cycle and the grumpy earnings, Frank, I look at that weekly chart and say, this is exactly what I wanted to see as a bull. I expect from a purely technical point of view, and I know we've got a lot of news events that can throw water on that, which is why I complain too much about earnings. Technically, I don't see any real reason that we're not working to those highs personally. We're going to close strong from the looks of things. We've got that one last line of defense, right? That 27th pivot from September. We're seeing the moving averages turn. We've went right through that 50-day moving average. I've seen a ton of charts that look like this within the market. So I think technically this is exactly the type of development the bulls wanted to see.
Yep. Mark, September really, when we look at it from a weekly chart perspective, was a pullback into the rising moving averages and rising trend line over time. The market had to fight for support on the intraday and the daily because they got messy there for a while. We were putting in lower pivot low, lower pivot high. And then the intraday chart really was day traders not knowing what direction to take it until the last few days. And the closing of this week now is pointing us towards strength. I'm with Frank. What about you, Mark? How are you reading these markets from a technical perspective?
Well, from a technical perspective, because I have my fundamental, I have my macro, this and that. From a technical perspective, it's adding directional exposure for me, where I see opportunities. Right. When you go over the course of charts over, when you've been doing this as long as you have, you respect reversal characteristic moves, because while they don't always translate into higher highs in immediately, boy, they do have a tendency to produce a lot of good bullish situations. And so, there is that part of and this is where investors can, longer term traders can, learn from technical analysis, is that whatever your macro outlook, you want to get some directional exposure going. You want to get some of those delta trades going. When you get situations like this, you can always convert them to cash flow later, right? If things reverse and this and that. But, it is an encouraging sign. It was a good option month, and it is setting up to have a strong move. And of course, we have earnings next week, and, that can create volatility. And so that's why you don't go put all your chips into the table at one time. But, you're starting to get curling up moving averages. The intraday charts look really, really, really nice. Layers and layers and layers of support that can help catch things on different things. And so and if this move is real, you're going to have plenty of good trades, right? If it's not real, well, it reverses and no harm done. You put in a few trades, maybe have to close them out, go to cash flow, but you got to take some stabs. Because this is what the beginning of a multi-week uptrend looks like that can, continue the longer trend you're in. So it's a healthy technical situation.
It is a healthy technical situation. And a lot of that did start with those reversal characteristics and fighting for support on the intraday, like you guys have been talking about. We've been detailing here in the show. Let me flash through the 4 different indexes. You tell me if you're seeing the same thing across all of them, or if one of them stands out a little bit more than the other. For me, the S&P 500, broad-based, it got a lot of balance in it, all the sector representation. I then go to the NASDAQ, and I don't see quite the same development yet there, Frank. It's not back above moving averages yet. We do have a higher pivot low, so that's encouraging. Okay. We did cross back above the pivot point here on the daily chart just yesterday, broke above it, but I see some congestion a little bit differently than maybe I did on the other one. What's your read on the NASDAQ, Frank?
Yeah, it's very subtle. And in a lot of ways, you're probably splitting hairs, but I would agree with you that it might be just a little bit behind. That could very easily simply be because it started lower, right? It sold a little more, so it was starting from a lower point. If you think about kind of, points, if you will. You get a gold star for putting in that higher low. You get a gold star for breaking back above that 9. You get a gold star for the 9 starting to smile, right?
Mhm.
Where we bend down, we're flipping around. I always love that smiling 9. You get a gold star for breaking resistance. Where it's going to differ is the S&P also gets a gold star for breaking the 50-day moving average, which isn't
Mhm.
nothing, right? And so I do think you're on the right track there as far as it being a little bit behind. Honestly, I would expect that it is not going to, it's either going to catch up or it's going to, pull back with the overall market. I don't think I think we're kind of out of the NASDAQ's out of favor phase
Mhm.
personally. I think, and it might be a little early to say that, but that's kind of what it feels like to me. So it really is the same chart. We do have that 50. I think it's a wise idea to respect it, even if you don't think it matters. Like I don't really think it matters that much right now. I don't care what I think, right? That's why rules are in place. Let's get through that. Then we can have very, very similar conversations to the S&P.
Yeah, I agree with that. It's going to be hard for me to map out a scenario where the S&P 500 breaks the 50, heads towards the highs, the NASDAQ doesn't at least follow somehow, and pick up steam a little bit. And it did have a deeper retracement. You are correct in terms of percentage when it did come back on the pullback. Weekly chart still intact. Mark, anything on tech real quick on that? We're going to talk sectors here in a minute, just on the
No, I
NASDAQ
mean, I could
specifically.
go. I mean, there might be headwinds that other areas don't have with, a Fed that's going to be less accommodative.
Mhm.
But, it's really going to be hard for the S&P to just make all-time highs if tech isn't participating on some
Right.
level. It's a massive, huge percentage of the index.
Mhm.
So, I mean, you might have your areas that you prefer. I prefer almost everything outside of utilities and interest rate sensitive things to tech. But man, if S&P keeps going, it's really hard for tech not to go as well. It's just too big a percentage of the overall index.
I agree. All right, Dow breaking back above resistance, but also a little bit more longer neutral here, Frank. Do you have excitement on the Dow? I mean, this is a clean breakout here.
This is a
But
nice break. It is absolutely a nice break. And if you're just thinking about, if you were mapping out a trade, I'm going to put a trade on the NASDAQ, the S&P, or the Dow. I think it would be easiest to do it on the Dow
mhm.
right now. I don't know that means I like it more, but I do think it would be a little easier. We don't really have any challenges until we get back to that 35.5, right, as far as resistance is concerned. Again, I think when we're ranking these markets, in a large part, it will be, the hair splitting. These guys would kind of fall into almost that same type of conversation that I at least have with the NASDAQ. But yeah, I think it is probably the cleanest technical breakout. Nothing really until we get back to those highs. So if I am trading an index, it probably is the Dow, because I think that's the easiest to map a trade out on.
I agree with that. I think in the short term, I agree
In
with
the
that. I mean,
very short term,
the
correct.
S&P 500 a little bit different. I think maybe even in the longer term, though, if you do catch an ultimate breakout of the Russell 2000, I might be more interested in this one from a position trade standpoint because it's taken so much time off. But it's also going to take more time to actually clarify that on the chart. And as of today, right now, the Russell just kind of banging up against resistance for me. Frank, anything you want to add to the rut?
No, I mean the rut, right? It's doing what it's supposed to. It's getting closer to the potential. Maybe we're going to try to break out this time, but until we've broke either way, the rut is neutral.
Yeah.
And intraday, you might be having a great time, and I have no doubt there are some folks that are doing that. But when you're looking at this chart, do you really want to be the guy or gal that says this is going to be the time that it breaks out? Because I don't think history backs your claim there. So still very sideways in the rut, which is not a bad thing by any means.
No, neutrality produces a lot of cash flow for those condor traders. So there's nothing wrong with that on the Russell 2000 if it does stay there. We know where resistance is ultimately. We also know where short-term resistance is right there at 2,300. So it'll let us know when it wants to break out because it will be doing it. All right, let's flash you the sectors here real quick.
And final thing, and I think next week is going to be huge because,
Mhm.
there's been a lot of people out there, myself included, that has been saying this is a much better buy the dip and then sell the rip market than it is, can you get a sustained trend? And I'm not just talking small caps, I'm talking everything, right?
Mm-hmm.
It's going to be very interesting heading when we get some earnings next week to see if that is, if we actually can get a little umph, if we can actually get a little umph. I mean, the S&P, had a good 6, 7, 8 weeks before this pullback.
Yeah.
Can we get, something like that, and I think, this coming earnings season is huge the next 2 weeks, because if we can get through, there is a narrative building this week. The bulls have not had many narratives but it is a narrative that has fueled this whole year. With all of the supply chain and inflation and, corporate profit margins being, can they fight through all of those and deliver strong earnings? And that narrative is starting to build that, yes, they can. And if that narrative takes hold in the next couple of weeks, you're looking at all-time highs and then probably then some. I mean, I wouldn't be surprised if that narrative holds. I wouldn't be surprised if we're at 4,700 at the end of the year. Now, there's a big if there, right? There's a lot of companies reporting. We'll see how it goes. But that narrative is starting to build. We'll see if it can follow through next year.
Yeah, that's a really interesting point. I mean, we're coming into the season down where that's not been the case as of late, right? So that is an interesting point. And you factor in the seasonality. If we can get the right earnings, and like
factor in seasonality, you get that narrative building.
I am preparing for the fourth quarter rally. Whether or not that's what we get, time will tell. But I am preparing for that personally.
I think you should be. I mean, we're not there yet. It's still a little bit early, but we've got development on the charts. We're starting to push towards a breakout. We're getting improvement in the sectors. We're 1 week through earnings is all, though. That's the hesitation.
Oh, yeah.
Just think about next week. Tesla reports next week. Johnson & Johnson, Netflix, Intel, Verizon, AT&T,
Procter & Gamble.
We got some big names.
80, some 70, 65, 70 S&P companies, right? Just S&P 500s.
Yep.
And then it's much more the week after. So it's when we are kind of talking about this, or at least when I'm kind of thinking ahead, because I understand, I think pretty much everybody at Team Tackle does, that this next couple of weeks of earnings can change things for the better or the worse, right? And we're going to have to work through them, and we will work through them together.
Yeah, absolutely. All right. I want to flash you the sectors next, if we can here, guys. Get your take on a couple of the different areas that grab my attention. Let's start with the cyclical areas of the market there, Frankie, because they were, right in the middle of our sector rankings. They weren't as high as our top sectors in XLE, energy, or financials, but the cyclicals were well above the defensive names as well. Let's take a look at that technology chart. Very similar to the NASDAQ, in my opinion. I'll get your take on all of them here in just a second. XLY, the discretionary sector, though, very clean breakout, beautiful run here. I think that's got to be an upgrade. But then communications, still stuck down well below moving averages and completely underperforming. What are you seeing in those groupings right there that stands out? Any companies stand out to you? All those kind of things.
Yeah, I mean, XLY stands out technically, right? I mean, that is a nice break. We've been watching for that breakout for several weeks now, right? And you never know when something's going to break out. I think that's clearly where we're seeing some strength. I think that's a clear upgrade. If you can't upgrade that, you can't upgrade anything, right? And so the discretionary is really appealing from a broad perspective. Again, there's so many discretionary names. I generally am not a trade the ETF guy. I prefer to look for individual components, but because of all of the earnings, this is a scenario where some of these ETFs could become, fairly interesting. I talked about that with XLF last week. I feel the same way with XLY this week. Could be interesting ways to play it. You've had some of the big names, right? Home Depot, Lowe's, they're breaking into highs within that space. And so some of the bigger names within it, you've seen things like Nike and Target that were kind of beat up and might still have some work to do technically, leading this rally. And they've led this rally, right? I mean, it's not like they're just solely benefiting from the market going up. I'm sure to some extent everything is, right? But they were kind of starting that process earlier. So you're seeing a lot of things. Starbucks, which was on the verge of a breakdown, held support, right? That's counts for something. And so you are seeing, I think strength, throughout the components of that ETF. So I do think that's an easy upgrade for me going into into next week. On the comms, I've been a little leery of comms, as you guys know, for a while. I don't think anything has changed. The Facebook bounce off of the 200, boy, that was very half-hearted, right? I mean, we did kiss it, we did bounce, but first challenge we got at the 9 EMA on Facebook, people were just bouncing, right? And maybe that's just a short-term thing, but if there was a lot of optimism and strength, I mean, hey, I can only think about me. If I bought Facebook off the 200 because I like a 200 bounce on a company I like, just Facebook's the wrong name, I wasn't going to be leaving at the 9 EMA. I wasn't going to be buying it off the 200 if I was worried about that falling 9, right? So not seeing a lot of great moves. You've seen the just absolute beating that Verizon and AT&T and Comcast have had. Yeah, they've got bearish retracements going on, but I'm not putting my money on betting that that's holding. So if anything, charts. Yeah, I mean, they're ugly, right? If anything, I'm probably personally going to be downgrading communications. That is far more so than tech, in my opinion, an area that I really, really don't like going into the very near future. I mean, that the time will come for sure, right? Those are some interesting names to trade, but the technicals within them right now, I just have not been a huge fan. And then you think about the technology sector. I think it'll probably be mostly a maintain for me. It is a little bit ahead of the NASDAQ in the sense that we've broke above the 50, right? So we've got that extra gold star, if you will. Now, again, lots of earnings, Microsoft, Apple, a couple weeks away, Visa, Intel next week, right? So plenty of earnings. Virtually all of the big names are coming up with the earnings. So again, tech is probably, for me, an ETF type of an area as opposed to a company area from a new trade perspective. I do like the chart though on tech. I do like that we've kind of got that S&P chart kind of vibe going on it, because I would say XLK looks a lot more like the SPY than the NASDAQ itself. So I do think there is some upside within this area. It's just I'm not going to try to get ahead of those earnings of which there are tons. So for me, I think it'll be an upgrade in discretionary maintenance, but I kind of like it a little bit more in tech, one of those type of things. And then a downgrade in the communications, nothing major, a 5-spot downgrade.
And the one thing that has me in the short term a little froggy about tech is, I wouldn't be surprised you see tech run next week, heading into the big earnings the week after. Like if people are like, give this, I mean, we've seen that happen on tech before where people are, because tech doesn't have, as many issues that maybe some other areas of the market do. Man, tech could go a lot of different ways, but we've seen runs into earnings before. We've seen runs into earnings before. And I wouldn't be surprised if that happens next week in tech.
Yeah. I think tech warrants a little bit of an upgrade, Frank. I do. Yeah. I think that.
And I wouldn't fight against it.
I think maybe a little upgrade myself.
Yeah. I think it'll be one of those areas where I'm maintenance, but I like it more, which could easily lead me to an upgrade, right? Mentally.
Yeah. I wouldn't mind a little speculative bet. Somebody give me a speculative bet on tech that I can play next week.
Oh, well, here's a great one from Trade Masters on Wednesday where I won the competition. Salesforce.com breaking into a new high this week. Yeah.
Yeah, for sure.
That's not the one he wanted.
Well, it was it was an amazing trade on Wednesday, right? Coming down, break out. A little extended for my taste today, but that was a great trade.
No, I'm just messing with you. There's a lot of interesting names in tech right now, in my opinion. I mean, even Microsoft. I know we've got earnings coming up here in a couple of weeks and whatnot, but Microsoft is pushing up against its highs, Frank. V-shaped recovery after the sell-off. So
you could work that. You got Oracle that's kind of had a little snapback into.
There's a lot of relative strength in that Microsoft chart
after breaking. So yeah, there's options for you. I do believe XLK is a legitimate choice as well. Personally,
I think so. I mean, I don't think that's a bad way to play it, right?
Gotcha. If your general thesis is tech, right, and I think that sounds like it is yours, not having to mess with the earnings, but potentially benefit from a run. Yeah, I think that's an interesting approach personally.
Very good. All right. Next areas I want to talk about are the cyclical areas of the market. I'm going to start with the lower ranked ones here, Frank. Improvement this week. Materials has improved. Gold improved. A lot of the metals have improved. We saw the breakout yesterday back above moving averages. And then the industrial names are actually popping up today and matching what we saw on the Dow Jones Industrial Average. I think both of those groupings are looking at an upgrade here this week. Frank, you agree?
Yeah. I mean, on XLI, we did the thing, right? We created that higher low, we created that higher high, we broke back above the 50. That type of a chart, especially with that type of movement, can oftentimes lead to you need a few days of price development for good trades, but it is a good move nonetheless, right? And that's where you kind of have to, and I think we can all be guilty of this. It'd be hard to want to trade that chart and a lot of the companies within in it today, but I still need to recognize that was positive development, right? And so sometimes we do have to remind ourselves just the simplest things, really, no matter how long we have been doing this stuff. And it's very similar in the material space, right? They're probably a little bit ahead of schedule. We really had that nice resistance level that we kind of fought really for a week at 82 and a quarter or so. So that's definitely some nice movement. It's been nice to see some of the metals get back into the swing of things, right? Newmont doing work is always nice to see. Even Nucor kind of holding its own. You had Alcoa, really great response to its earnings, breaking some resistance at Alcoa, so it's got a lot of stuff ahead of it. You've seen aluminum like CENX. So it's been throughout. What I really kind of like about the materials area of the market is it's been fairly evenly distributed between what kind of companies have shown well as we've worked through this recovery. So I think for me, they're probably going to be close to one another. But if you made me pick, I would probably say I like materials a little bit more this week than industrials. It would be close, and I wouldn't put up my dukes and try to fight you if you were on the other side of that. But so again, earnings, right?
Do you think they're worth being put into bullish territory yet, or are we still a little bit hesitant? What do you think? Because we're right there. It's either 40 or 35 with these two. I know that conversation will settle later.
Yeah, for me, I think I'd go into bullish territory. Yeah. I think I would go into the upgrade and get a little bit more willing to be directional within this space, even if it means we need to consolidate for a week or pull back, let that rising 9 catch up. I mean, that pattern is the one you always like to see, right? When you're showing great strength, breaking resistance, but you're kind of flying high. The hard part isn't the entry, it's the stop. I mean, I don't want to get stopped out if it has just, a day or two pullback, right? So it might need a little development, but I do think, for me at least, whatever that development is, whether it's a pullback into the rising 9, a little flag, consolidation, breakout, I do think the move after that is an actionable place, at least to be looking. So yeah, for me, it would be an upgrade. I would have to. I agree.
I'm on the same page. Mark, I want to bring you in next on energy, because you and I were having a conversation about it this morning. This one has been the strongest area of the market. It continues to be. It had another great week, and we're pushing a high here today. Mark, what's your read on energy right now?
I mean, the thing about energy, because I'm getting reports from a lot of the cash flow Viking members in my trading lab that they're hitting all-time highs in their account. A lot of them played some Bitcoin and some oil in the last recent weeks. I think there's a correlation right there. And I like it when traders hit all-time highs in their account when the market's not hitting all-time highs.
Sure.
It makes me feel like they're, doing some above and beyond, because a lot of fund managers can't outperform the S&P 500. That is a well-documented fact over time. A lot of fund managers, professional ones, fancy offices, fancy suits, they can't outperform the S&P 500. So if you're hitting all-time highs when the market's not in your account, you're doing something right. Oil's been a big contributor to that. Strong macro environment on oil, and we've had a strong surge in energy stocks in the last few weeks. I still think there is a lot of genuine value. There's certainly momentum, right? Without a doubt, there's momentum, but I think there's still some genuine value. The tricky spot, and I'll get both of your intake on it, and this is where I always run into some tricky things on this. I'm like, all right, it's been a great 3 weeks, right? We're a little stretched. Stretched. It's not that it can't stretch further, right? And so making those decisions like, all right, do I take some profits? Do I keep some directional? Do I go some? I mean, and these are good problems to have. These are really good problems to have. You want these to be the problems you're always facing. What do I do with all these profits, right? What do I do? Do I start doing aggressive cover calls? Do I take profits? Hopefully there's a pullback. I mean, it's management decisions now. The macro environment is still really good. I think there's still value in energy, but it has been a strong run. Do we consolidate here? Does it take another leg up? I don't know those answers. Nobody does, right? But it's a good area to have. And so finding your sweet spot in the management of energy right now is just, I mean, that's a you decision. Are you going to continue to be aggressive? Are you going to pull back, maybe wait for a pull? These are good problems to have. I mean, what do you guys take on the current energy situation?
I'll answer that one first. Couple things. I think it depends on the name. I really do. And this is a dealer's choice situation for me within energy because, I'm like many people in tackle trading. I'm sure I'm focused on energy this year and really since last November when it took off. I've added more companies, more exposure to my watch list, to my trading accounts throughout this year than I had probably in the previous 2 or 3 years, right? Because energy was way out of favor for a long time and it's been a top sector for a while. So for like a longer term holding for me, Mark, like on an Exxon Mobil, because I don't own Exxon for the short term, I own it as a part of my long-term accounts. I'm writing covered calls on those situations right now, and not aggressive covered calls. I'm not writing in the money or anything like that. I think on Exxon, I got the 65 call option. And a little bit of upside there. So, but then on Devon Energy, which was my favorite pick from the scouting reports last week, it was, we do that little video at the end of the scouting report meeting each and every week. And this is the one I highlighted as my bull pick. Devon, I'm not covering. I'm playing it directionally because of the nature of the momentum and the pattern. And those are just personal choices for me, whether they work out or not. That's a different conversation. But Frank, what about you to the question? What are you thinking right now with the energy sector?
Yeah, I think it's fairly easy. As long as we're rolling above this rising 9, we want to roll with it, I think. And so that would be the first changing of momentum, potentially at least, signal that we got, right? Where we actually close below that 9 EMA and fall below that 9 EMA. If you do believe that there's more upside from here, whether it's from a momentum, value, or both perspective, which I agree with Mark that it's both, you want to have that exposure. As long as we want to live our life above the 9 EMA, who am I to say when that party ends? It might end next week. It might end at the end of the year. I don't know, but I would like to be attending that party if at all possible. So for me, Mark, it's really simple. You're kind of using that 9 EMA, at least from the momentum-based directional side of the equation. As long as we're rolling that, as long as that keeps pushing up, and I don't need to tell Mark about moving averages. I think we can maybe overcomplicate it. That's just an easy way to try to roll the momentum. Hey, if this wants to live above the 9 another week, that's probably good for my oil stock. Let's let it change before we change, I guess would be my stance.
Yeah. And we pull up AMAT, Tim. One of the mistakes I made on semiconductors on the election, Rode made some money on the way up. But, when you started to get into oversized moves, after, a few weeks, a month, you're like, all right, this has been a huge, man, it had several legs to go, the whole semiconductor space. And so it's one of those, because the markets have changed a little bit in the last year and a half. The moves, whether it's, FedEx when it was on its way up, whether it was Roku, whether it was Zoom, whether it was AMAT, when a strong move gets going, man, it can have several legs to it on the way up. And gets little pullbacks and then gets restrained and then eventually settles at a spot. Why did it settle in the 130s and consolidate from there for the last 6 months? I don't know. Why was it the 130s instead of the 120s? I don't know. Right?
It just did.
It just did. Why was it 130 instead of 150 or 110? It just did. But there were so many legs on the way up in the semiconductor move that, and I don't know if oil is going to do that, but I've seen this in several area of the markets. We saw this in Bitcoin. We saw this in FedEx for a period. We saw this in tech in 2020 period. We saw this in, we see this. And so you don't want to shortchange yourself either. You do want, I think, some directional exposure because you don't know if it's going to be this kind of move. But we've seen these kind of moves in the last year in a lot of different areas. Why can't it be energy this time? And that doesn't mean go put all your chips in the middle of the table. But what it does mean, I think, is don't be a total coward and not have some directional exposure. And yes, looking back, if you have an oversized move, looking back 6 months from now, you're like, I knew it. I should have put all my, no, you don't go put all your money. There's always good opportunities. But I do think you want some directional exposure uncovered in some area in case this is a larger move. You can always cover it later, and find ways, it's a fine dance to play, but I do err on the side of having some directional exposure in oil at all times until, for a while, actually.
Let's ride the lightning right now. I think it needs to reset the pattern on XLE for you before you do something on a timing perspective a little bit, Frank. Maybe a consolidation.
Yeah, and I'm more talking to people with existing positions than someone looking to get that first position, right?
Sure.
Yeah, for new. Yeah, I mean, it could use some development, but at the same time, when you're riding, and this is again more directional and to add exposure as opposed to whole philosophy. Anytime we break resistance, that is a signal, right? I mean, that is a signal. Oh, we held the 9, we broke resistance, right? It's not necessarily the cleanest, prettiest chart at that point in time, but that could be interpreted as a signal if I'm looking to add or to pull off a call or something along those lines. So, but yeah, I mean, if you're thinking about a new trade, I mean, you'd love to see like a week of consolidation, let that 9 catch us and then push us back through, right?
Yeah, I think and eventually there will be a pullback. Now, does it happen next week or does it happen a month when it's taken another?
Well, I mean, look, we're dancing right at a significant resistance level on XLE, right? It is not going to take a whole lot of upward movement for me at least to believe that it's time for that next leg, right? I mean, if you think about it, we've really on XLE consolidated at a known resistance point at 57.50, that general ballpark. We've consolidated for a week plus at that resistance level. And I might push back. I think there might be some opportunity to play that from a breakout point of view if I didn't have anything. Now, I know most of us here at Tackle Trading have that exposure already, but I think that consolidation has started to happen, right? We're always just greedy for a new entry. We want 2 weeks of consolidation when we got one, right? And it wasn't a complete flatline consolidation period. At the end of the day, you're looking for your system rules, I guess is a good way to put it. And as long as we're riding hot, why don't we continue to look for those opportunities is I guess the stance I would take.
I'm with you. Great question and good conversation there, guys. Appreciate the thoughts. XLF, final one on this one here, and then we're going to take a quick peek, a little rapid fire style through the defensive areas of the market. This one to me warrants an upgrade here with bank earnings starting. I know we still got major names next week as well, but you got a lot of the big money center banks out of the way. You got a bulk of the huge names, the BlackRock Financials, Goldman, which we're going to analyze here in just a minute. JP Morgan, they've reported. Now you're clearing a new high here, Frank. What's your read on finance?
Yeah, I mean, we were knocking on the door of a break. We got the old dreaded fake out early this week, right? Where it potentially broke out of resistance just enough to get folks into it and then sold off the next couple of days. But that was then. This is now. We are, barring some weird miracle, we are going to close above resistance. I mean, if you look at that thing on a weekly chart, that is maybe the volatility on the lows might, be a little annoying, but as far as the close itself, a nice hammer candlestick on the breakout, hard not to like that weekly chart. So yeah, I think this is again, much the same as XLY, right? It did break out. Breaking out is hard to do, right? It sometimes doesn't feel that way, but everybody knows where resistance is. Breaking through that resistance takes money, takes real oomph, right? Sometimes right. More than others. So, a nice close above resistance. Absolutely. Just looking at, I kind of be broadly speaking, looking at this kind of from a weekly perspective as we're going into the near future. And again, if someone wants to be, a little more cautious and get a few more earnings behind us within those remaining, that would be understandable. But technically, I mean, yeah, you got to upgrade this. Same, very much like XLY in the discretionary space. Those are got tos, right? Breaking out is an easy upgrade for me every single time. I don't have to put my hat on.
I don't know how you don't play something here on that breakout. There are some patterns. And I'm a pretty conservative trader. There are some patterns where the index breaks out, and I'm like, you just got to take a piece of that.
It's strong. It's really strong. It's got incredible relative strength against other sectors. earnings season theme.
So let me get this right. And I said this a couple weeks ago in energy. I feel the same way here. So let me get this right. You got a breakout of a multi-month consolidation pattern, which is really a breakout when you look at it of about a 6 month of sideways nonsense, right? So you've taken an extended breakout. You have a rising rate environment. I don't know if anyone disagrees with that. You just came off a stellar earnings season where pretty much across the board, banks, Goldman Sachs, everyone just freaking killed it. You got sentiment moving forward. I mean, if you can't play this break, I don't know what to say.
I agree. Finance is going to be an upgrade. Just depends on how you want to play it and where. I mean, obviously the sector is in play, but I think there's some really interesting individual names. We'll keep talking about them, and yeah, just good strength there. Let's talk the defensive areas real quick here, guys, if we can. XLV still now trying to bottom a little bit, Frank. I mean, a little W performance down there, needs to clear the 20 period moving average. Did get that smiling 9 to at least kind of curl the lip there a little bit there, Frankie.
It's giving us a smirk, right?
Yeah.
It's smirking at us right now, and that's making me wonder what it's really thinking. You got to love the double bottom, right?
Mm-hmm.
We are at that resistance level. In some ways, it feels like these guys are a wee bit behind, right? With where things are. And I think that was, broadly reflected in the charts I was looking at this morning. I think this is an area that could use another week of consolidating or letting that 9 catch up, get that little pinch type of scenario developing, but a good starting point. If nothing else, I think this gives us faith in that 124 resistance zone. I think when I look at this chart, I feel more comfortable saying, you know what, I think we found our short-term bottom, as opposed to I think I want to add exposure, at least broadly speaking. With a break of that resistance, I would call it a win for the bulls. I wouldn't fault somebody for wanting to take a little movement into this space, but I personally think that this one's just a little bit behind. It could really use a little bit more of just a little more time, not even a full week, right? Even if we could just get like 1 or 2 candles down, create that higher low, and then take out that resistance, that would do so much towards cleaning up that chart, in my opinion. So you like the support. I think you feel pretty good about that support level.
Mm-hmm.
How good, I guess, would depend on whether or not you were looking to add exposure. Right now, again, broadly, I think we need a little more time.
A little bit more time, I agree. A little bit of an improvement this week on XLV. Then Staples, they did fire back up towards a resistance point, but still a muddy mess to me. Frank, anything that catches your attention?
I think you're probably looking elsewhere as far as that goes. Right now, there's other options out there, and this just seems like a tough place to try to be trading right now.
I agree.
And generally speaking, while this is overly generalized statement, this isn't where the broad upside is, right? As a general rule in the market, as Matt and I argued about with GIS, which has basically done enough to make both of us feel like we're right this week. So we'll save that conversation for next week. So
this is my least favorite area of all the sectors.
I would agree. I think I would have to agree with
maybe
that. It is
utilities.
Yeah, but I don't even think about them as they're utilities. They're their own thing, right? Yeah. But this is kind of a rough road on this chart. I mean, again, much like the broad market, there have been signs of improvement, and just because I don't like it or Mark doesn't like it as much as other areas doesn't mean those signs aren't there. Just, I've looked at these, there's about, 80 staple companies that are in my watch list, and by and large, just like yuck. I don't know what you're supposed to do with that. And I think that's where this sector is right now.
Yeah, gross for me as well. Needs some improvement, development, no question about it. And then real estate and utilities. I mean, real estate has picked itself up here a little bit. Utilities has a little bit as well. I mean, bottoming, creating foundations a little bit there, Frank, but not exactly an uptrend and not exactly bullish or out of the woods. What's your read on those two sectors?
No, I mean, with utilities, what you're seeing, kind of that, hold support, right? We knew we had some support around 63, 64. Nice to see that hold. Nice to see some upward movement. I mean, if I'm thinking about adding a utility stock to my long-term portfolio, this W is fairly interesting to me. Utilities generally, we're not trying to swing trade. We basically, once in a while, they do trade like growth stocks, right? Once in a while, utilities are just hot. It's going to need to do more before it convinces me that that's the case. So trading wise, I don't think there's anything to see here. Longer term wise, I mean, we did hold support. We are getting a W. There is at least a little bit of a technical argument, I would say, to adding to that longer term utility, if that's something that's been on your mind during this last, couple of months of weakness in utilities. I don't know that that has been on anybody's mind, but I do like the bottoming. I do like the bottom, and I do like the fact that we're trying to W. You got to respect that price action.
Yeah, respect it. Seeing some bottoming price action, but we're not quite there yet. And REITs obviously is kind of very similar, but a little bit better because it's coming from a much different location. Still has very clear resistance to me here, Frank.
Yeah, it feels like going into next week, you're kind of. I'm shying away from the defensive sectors of the market. Yeah, there's just other, the growth, the cyclical. There's things in there that stand out to me for right or wrong or better or worse. And health and the defensive areas just feel like they need some time. Their time will come.
No, and I think on the defensive areas, like, when defensive made its move up a few months ago, it was in that take turn market where one thing was doing one thing was doing another thing, and they got a lot of turns, and then defensive kind of held their own along the way. I think we're in a more volatile market conditions where people are still a little unsure, right? People aren't all like, oh my gosh, it's over, all volatility is done. And I think they're looking for, if they're going to take chances, they're going to take chances in a little bit sexier areas of the market, if you will, when they're going to take chances rather than the defensive areas. So, I definitely think defensive areas are a wait and see right now, as you have a lot of other choices, right? And it makes sense. Like, if you're going to put money in the market, you're going to look at finance. You might look at the tech bounce. You might look at some discounts in comm. You might, energy, discretionary. But there are a lot of choices right now.
Yeah, you've got choices, and hey, if one of your choices is defensive, fair enough.
Well, I think that's going to lose a lot of tiebreakers and a lot of traders. So I'd just wait on those areas, right?
I'd wait on them as well. All right, quick flash through the commodity market, then we're going to get into stock talk. I got some earnings to round up, and then Frank, you've got some charts for later in the show to share with the team out there.
Got a few charts to take a peek at. Yeah, for sure.
All right, let's start with gold here, guys. Gold was not out of the woods. Frank, in fact, you say this all the time. Resistance is resistance for a reason. It takes work to break out. Breaking out is hard to do. I see Dina quoting Neil Sedaka lyrics in the chat there. Frank, it banged its head against the 200 falling moving average, right back down into the range. It's a sell-off here today. We had some reaction to economic data through the week. And at the end of the week, we're now just still stuck in a consolidation. What's your read on gold?
Yeah, I mean, you almost needed to see this, right? It makes sense that we slammed into 1,800. That's a big number. That's the 200-day moving average. It makes sense that we would see some selling there, right? Maybe you didn't want it to be so aggressive, but that does make sense, and that is healthy development. Now the question is, are we able to establish a higher low? Correct. If we can do that and then take out that 1,800, I would not have thought that there was a trading opportunity above 1,800 if you asked me this yesterday. Not because of the red candle, but because I need to see how it's going to respond to very natural profit taking, right? And that's not just gold, that's just this chart. It makes sense that it sells there. Let's give those folks who have bought into it over the last couple of weeks an opportunity to take those profits. Let's give those bears an opportunity to sell, see where their head's at. If we can create that higher low and push through that 200-day moving average the second time, that would be a signal where I would personally be interested and be very open to maybe opening the risk graph on gold a little bit. But that is what I would need to see. We got the first step, right? The failure at resistance. That makes sense. Big red candle. Wish it was a little bit more smooth, right? 2 or 3 red candles, that ultimately ended that side would have been nicer if you were a bull. But the point and the price action will stand. If we create a higher low and we break back above that resistance, which just so happens to coincide with the 200-day moving average and that big round number, then I think we could talk, because there does seem to be a little bit of an open window there until we get into that 1830, 1840 zone of price. So, and that would be, of course, the break above that. And those pivots would be kind of the next big signal for me from there.
Yeah, gotcha. I'm with you there. And by the way, I want to just quickly flash through some of the metals market just to give some context to what's going on with gold. It didn't affect everything. Copper blasting out, platinum, Still looking very strong. In fact, reversal characteristics on that one throughout the week. Palladium, it did sell off here today, but it did pick up off of the lows, and it was the worst rated one that we have.
Oh, yeah.
Silver even showing us a little something, not taking it as hard as gold here today. So in general, yes, gold banged resistance. It came back down into the range, but the story around metals is still developing in terms of reversal characteristics and all that kind of stuff. So some interesting charts to keep an eye on out there, tackle trading. Crude light here real quick, guys, just continues to chug along. I had a just random thought. I had a really, really wonderful conversation with my daughter yesterday. She's home for fall break. She's in junior high school right now. Sammy, 12 years old. And I asked her, because we had to fill up the truck with gas. I said, Sammy, do you remember what gas was like a year ago? She said, yeah, it was like 250. I'm like, why do you think it's higher right now? She's like, I don't know, inflation. I'm like, well, very smart. And then we had a conversation about why inflation is happening and what is going on with crude oil, about the supply side, Mark. And we talked about all the reasons why supply has been contracting a little bit. That's not the strongest part of the argument, but demand has been picking up globally and all those kind of things. It was just a wonderful conversation. Marky, if you had to answer that question or explain it to a 12-year-old, why is crude oil going up and why are we looking at higher prices over time?
Money printing go burr.
Money printing was part of the answer as well. I talked about the Federal Reserve and the balance sheet and all of the cash injection we've seen into the economy. Frankie, it was just fun. I don't know, father moment, little dad moment. And maybe all I needed to do was just show her the chart and say, hey, look, it's going up.
Like everybody knew that there was a ton of resistance between 75 and 77. Once that broke, it was all bulls are running.
The real world out there is a freaking mess. Like right now, stocks can, pound and, oh my gosh, they can live in whatever nirvana they want. The oldest commodity index in the world, and it doesn't just measure this and that, hit an all-time high. And they measure everything. Like they measure like bootstraps and this and that. I mean, it hit an all-time high. We have a friend named Brett we play fantasy football with, right? He says that he's a real estate broker. He says that like Ivory Homes in here having a hard time getting paint.
Really?
He ordered a windshield for his Ford truck that broke. It's got to wait 6 months to get it.
Wow.
We are in a situation in the real life economy where there's all kinds of money out there, right? And there's all kinds of demand and all kinds of everything, but literal supply in the supply demand equation is on the light side. And so when you have demand is not the problem, the whole stagflation thing, demand is not the problem. The supply is the problem, and it is pushing prices higher and higher. The availability of things, the demand side equation is there, and it will keep growing stronger. The supply side, though, having a hard time keeping up. There was one of the China chip makers yesterday said, like, listen, the chip problem is going to be a 2-3 year problem, catching up, because you just don't turn on oil rigs. You just don't create new fabrication plants. You can have all the demand in the world, but it takes a while for the supply side to catch up to demand. And until that equilibrium hits, higher prices.
Higher prices is what we've
You're used to paying them everywhere in life. And the Fed can lie to you and say it's transitory. They're lying through their teeth. It is a criminal lie on their part. These are not good people, and they have their own agenda. But get used to paying higher prices and get used to seeing higher charts in commodities.
Yeah, also true in natural gas, by the way, just a heads up, you're probably paying 20 to 30% higher.
No, your heating bills this winter are going to be whatever they were last year. Just be grateful you don't live in Great Britain.
No, it's going to be a lot higher.
They're going to be a lot higher.
I agree. All right. One other thing that is a lot higher here today is Bitcoin. In fact, we're breaking out of this $60,000 level.
Doesn't this last couple of weeks feel a lot like the start of the year? Like it's maybe especially you got some really strong, massive moves in different areas of the market.
That's a great question. I hadn't thought about until you just asked it. But yes, in some ways, it does feel like that, Mark. But from a sentiment perspective, I think it feels completely different to me. These feel like different bulls. At the start of the year, you had the meme stock mania. You had different people piling into crypto. The sentiment behind it was a specific type of investor and trader. I don't know if it's the same group of people, quite frankly.
Might not be. That's good observation,
Yeah.
actually.
I think it's a different type of person who's playing these Bitcoin rallies right now. And the reality is, we're looking at positive news behind Bitcoin. Potentially next week, the SEC is rumoring to inching its way towards approving an ETF for Bitcoin because they're going to track it to the futures market, right? One of the things that Gensler at the SEC has said for a very, very long time, because he's a Bitcoin supporter. People don't know that a lot of times, but he actually does want Bitcoin to be out there. He said, we're not going to regulate it the way other countries do. He even said that in the last month. He's always laid out the argument, tie it to the futures market, tie it to the futures market, tie it to the futures market. He's hinted to that many times. We're probably getting news on Bitcoin very soon about a Bitcoin ETF. That's leading to some of the sentiment, but the chart itself is just rocketing and very, very strong, Frank. I mean, now what grabs your attention there? Because I see a 4-day consolidation into a breakout. Now we're pushing.
Yeah, I mean the only problem with that is we've now pushed, right below those highs, right?
Mm-hmm.
Which makes it kind of tough to buy right here. You're probably looking at the ultimate breakout there being that next signal. Certainly an actionable trade this morning, right? Clearly, everybody who was anybody buying Bitcoin, that's what they were doing this morning. I mean, you have real optimism that it can break that resistance, right? I don't think you should, like I said, I don't think you should ever just assume it's going to break resistance because you want it to, or it's got a good head of steam, right? We've all seen, resistance win those battles. I do think you are looking at a potential breakout of those all-time highs, and if you're a Bitcoin person, that certainly would be very nice to see, right? So I think the trade has already happened. If you were going to trade out of that little base, and now we're just, can we break into these all-time highs, right? And well, it sure got a good head of steam going into it. I wouldn't want to bet against it.
It's been an incredible year for the crypto space. There's no doubt about it. I mean, we started the year down here in 25K. We were breaking out of all those different levels. You guys remember how detailed that 20,000 breakout was in December that we highlighted and then just ran. But over the course of the year, Mark, we've had quite a volatile range. I will just say that, between 30,000 to 60,000. Now we're back pushing the highs. I don't know, exactly how it's going to respond to the highs. You have to always respect it. But these rallies this last couple of weeks have been incredibly impressive. Marky. Yeah, absolutely. Anything else you want to add to crypto, Mark, what we're talking about?
Tell me how to play it now that it's overextended.
For me, I'm a long-term holder, so I hold, and I'm not getting swept up in the short-term stuff. I add little exposure here and there at different points, but I actually treat this much longer term than most people. So I'm not going to tell you should just run out and chase it as we're pushing 65K. We got to test resistance in the short term, in my opinion. Beautiful move in Bitcoin. All right, let's get into stock talk here, guys. Earnings roundup. We got to start with Goldman Sachs. There's no doubt about it. Goldman came out and they just destroyed the numbers. I actually dug into this one quite in a little bit of detail here this morning. They put up $14.93 EPS against an expectation of $9.78. Now, that is a huge beat for a company this size and where the banks are in general. They also beat on revenue, 15 billion in revenue against 11 billion in revenue. And Mark, all of the categories that you would have expected Goldman to do well in: trading profits, strong; M&A activity, strong; advisory fees, strong. Pretty much beat all the way down the line. And the chart is responding in a favorable way, in a little bit of a gap up. Let's get Mark's reaction, number one, to just Goldman coming out and stomping the floor with the numbers. Not surprising to me, by the way, especially watching what JP Morgan did earlier in the week. What'd you read here on Goldman Sachs, Mark?
It was a great earnings report, right? I mean, Goldman's had a great year. I mean, when you could look back, I was a little taken back when I look at Goldman's chart because I haven't looked at it in a while. Like they've had a great year. They've had a great year and continue to produce just outstanding returns. It's not a question of, is Goldman Sachs going to be a great company moving forward? It's just finding good entry points and playing it. Or if you're a long-term holder, how do you manage it? I mean, this is one of those companies that, like when you list out companies, who is going to be higher and probably much higher in price 10 years from now. Goldman Sachs is up there, right? Company that knows how to make money, but a massive year, right? I mean, they've already almost doubled this year, so they better produce these type of returns. They better produce these type of returns since pulling forward so many things. So great earnings report on a company that's already had a great year, but also one of those companies, 10 years from now, probably looking at much higher prices.
Frank, is there a potential trade here now?
I think there's a scale in opportunity here. I think our real nice trade is the breakout of 420.
All the way up at the top. Yep.
But with where we are, I mean, we've got approximately speaking $20 to that price point, with the fact that earnings are just number one behind us, right? That helps. If you do like the financial space, it's hard to say, but I don't think Goldman Sachs is going to, take part in that movement. That doesn't seem like a very likely scenario. I actually look at this high today lining up with that high from the 28th and say, hey, look, we've created higher lows. We've got the nice backdrop of earnings behind us. If we take out this high, this weekly high or the high of the 28th, whichever is higher, I can't tell just looking at it. If we break through that, maybe we add a little bit at scale in to that position and then look to add on the breakout of 420. Quite frankly, I expect when it broke out broke out back in August, that breakout point, I had a target in mind right around 440 as the kind of the target. With the way that the chart is developed, I think that's still in play. I think that's still fair if we can get through 420. So I kind of like the idea of scaling in off of the earnings, coming in above this high. Stop loss placement would be kind of up to the individual, but probably conversation would start below today's low, and then we could go from there. I'd like to get it below that 9 if possible, and then look to add on the break of 420. You could definitely get me interested in scaling in. I wouldn't go all in here, but you could get me interested. I think there's enough of a window between this breakout and that 420 that we could try to maneuver. I do believe there is a potential trade here. Yes.
Interesting concept. So a little scale in, take a partial position on confirmation of this weekly candlestick and a break of that pivot from the 27th, work your way to the highs. And then as we get there, then you can make different assessments. I know that's a popular technique for you. Frank, you like that scaling in technique in general, and this candidate for it. All right. Gotcha. All right. Let's take a look at a couple other ones here that grab my attention. Schwab next, SCHW, another financial firm, another beat and another breakout here up at the highs. In fact, this one's a much cleaner short-term technical chart. It's pretty, right? I mean,
momentum play, baby.
Yeah, that's exactly right. They came out and they posted 84 cents EPS that beat expectations slightly by 4 cents, 4.6 billion in revenue, beat expectations slightly by about $100 million. Not that big of a beat, enough just to propel it to break out of the current chart condition that it was in. Frankie, there's momentum there. There's a trade there. How do you approach something like this? We're on a Friday, right after the earnings report. What's your take on a situation like this?
I think you got a few options. Option A is the long term. This is great development from a long-term perspective, right? Where, you can just kind of go in, give it lots of room. Don't have to get super specific on exactly what the entry is. That's not probably how I'm looking at it, but I would fault nobody for that. On the technical side of things, could go the good old fashioned momentum bar by bar strategy, right? Hey, let's see if we can carry this momentum going into Monday morning. If we take out today's high, then today's low is important, right? And we'll use that as our stop loss, and we'll basically bar by bar it on the way up. The issue with that, well, I don't want to know if issue is the right word, but we would need to target to about $87. So we would need to believe that $87 was a reasonable place to go from this breakout point. I think that's not unreasonable, but I also think some people would say it's just that's a little bit too much. If I like the momentum and I want to kind of use that bar by bar methodology, I'm going to go into that hourly chart. I'm going to look at this consolidation that we've seen since the open. I'm going to get a stop loss below that, and that 9 on the hourly, that's going to let me drop my expected need, right? Where do I need this to go to get that risk to reward to make sense? And that's going to put me closer to $85, which seems a lot more fair. Right or wrong, that does seem a lot more fair to me. I actually think a little intraday consolidation using the intraday. I much prefer the hourly to the 30, but the 30 would be a very similar philosophy, right? And they are, you're kind of splitting hairs a little bit. I like the hourly. I like the base that's developing. I like getting that hourly 9. I think we could, if I'm looking at momentum, I would probably look at using the hourly versus the daily for a stop loss. I'd have no objection to want to play this momentum. I mean, that's legitimate momentum. We had it coming into it. We're in a strong space. That is a pretty nice looking chart. The complexity, I think, really comes down to how do we build the trade. We could also just say, hey, look, let's consolidate here for a few days. Maybe it does rip and we just miss out. But if we can get that 3-day consolidation, right? Because now I've got it on like 3 hours and change. So if I could take that same methodology from the hourly chart into the daily chart, that would be a fantastic signal, because then 87 would not be a concern at all for me for a shorter term target. I think getting to 90 would be a very reasonable expectation, but we do need, again, sometimes you just got to give the folks a chance to take some profits, right? So it can have those extra legs on the way up. So I do think this warrants being in a watch list. How you play it would very much in large part depend on you and your style.
100% agree. Watch list this one, guys. There's a lot of different ways you could map something out here, in my personal opinion. Opportunity, though, is there after a breakout on strong earnings, and now that's behind us, and we're pushing to new highs. All right, very good. A couple last ones, 2 more actually. We got to talk Alcoa. Alcoa traditionally and historically was the company that always started earnings season for us. We're all old enough to remember that, right?
Will always be the
Listen, you guys used to make fun of me, and I want an apology because Alcoa was part of my 100. And it's like Alcoa, yeah, blah 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 blah. And
I don't remember doing that.
Revisit this, buddy.
Who else is on that 100? Maybe we'll go through every one of them and give you some
and
feedback.
Whoever you make fun of the most, I'm tripling my account size on.
That's usually how it goes, right? The more you run your mouth, the more wrong you tend to be, right? Or maybe that's just me. I don't know.
Happens a lot in life. Alcoa came out and posted Q3 earnings. Let me read my notes here. $2.05 EPS on 3.1 billion in revenue. Beat the earnings expectation by about 10%, Mark, and beat the revenue expectation by about 8%. Strong numbers. I didn't dig anything else into the report on this, so I know nothing about what else is going on besides strength in metals, strength in this space in general. And you come out and you put up a beat and a beat. That's the price response that you get.
And
Mark,
the thing is, supply chain's a mess, right? Demand's there, but the demand. I mean, these companies, your Cleveland Cliffs, your Alcoas, your Freeport, they got buyers for everything they mine. They got buyers for everything they make. I mean, it is not a problem. It is just how much can they make as quickly as they can. Robust. I mean, we saw this. I wouldn't be surprised if Cleveland Cliffs coming on and kills it, right? This is an area of the market where fundamentals, yes, price has gone up a lot, right? Fundamentals justify it. And at least in the short term, man, the demand side is just there in metals and mining right now.
And for me, Frank, this is a very different chart than the last one we looked at. Schwab has much more setup potential because it hasn't gone 8%. This is up 16% now. When you blast and run like this, we're talking day trading mechanics, and that's really what's all that's happened here today.
Right. And with Alcoa, I mean, they've got a lot of history. Schwab, we're at all-time highs, right? Yeah. We don't have, Alcoa's got a bunch of history on top of us. We do have some fairly significant price action in that $60 ballpark, both from a resistance and a support perspective over the last, decade plus. And so it's a little tougher to map a trade out. I would agree with you. We ran hot into a known resistance level. I think probably the breakout of approximately 60, without getting too specific on the numbers, is probably the next real trading opportunity that I can kind of project on Alcoa. But gotta love that movement on that. I mean, that's a great, if there wasn't overhead and the candle wasn't so big, we'd be a little more excited, right? It just is very tough to play. You can, however, look for the old Cody special snapback if we do get a quick retracement back into 52. If we get that,
for whatever reason, right?
For whatever reason, and not that we should necessarily expect it, but if we do get it, that could be a little different conversation. That could be another one of those, 60 is still a big deal, but maybe I can build a little something and start working my way in to a position or into a trade. So tough to do much with it today, though. I can't imagine personally setting up a trade on it.
Yeah, I could see that next week. I mean, if that did happen, and we don't know if it will or won't, it might just blast off for all we know, go test 60 like you're talking about. But if you backfill and then you get a little opportunity back here at 52, the old resistance, there's something there for sure. All right. And then the last one, and by the way, in my personal opinion, one of the most interesting ones of the entire week from an earnings perspective, not as big of a company in terms of known entities as Schwab or Goldman Sachs and all that kind of stuff, but a transportation company. And one of the themes in the market, Mark, has been about the supply chain glut and how we can't get things moving and all that kind of stuff. JB Hunt here came out and they had a wonderful earnings report, $1.88 against $1.77, 3.1 billion, beat expectations. But they also had some commentary about their time of delivery and what their expectations are moving forward. It has some positive things to say about the supply chain in 2023 not posing as big of a problem, and they didn't see the same issues that other shippers did. Marky, this is a huge move to the upside. I'm not a trader or an investor in JB Hunt. This isn't a company I track all that much, but do you think there's anything here in terms of narrative? Because that's one of the open questions you have.
When we look back 2 weeks, 2.5 weeks from now, and I will call it the JB Hunt effect, because these are the type of companies that if they can, if more of these companies than not have commentary and guidance that give calm, soothing, warm fuzzies to investors that are in the midst of supply chain and inflationary and this and that, if there can be a whole bunch of JB Hunt's, market's going to be at 4,700 at the end of the year.
We'll see. It's one data point. It did grab my attention though from trucking, and Frank, there's nothing in the chart there to
no, but it definitely is something that warrants an add to your watch list. Yep. Breaking out of a multi-month consolidation period, right? There is plenty of upside, no old resistance to hold us back. Good narrative on the stock itself. Just because there's not a trade today doesn't mean that there's still not some legitimate upside, I think, in these guys going just purely technical. Just purely technically speaking, I see no reason to not want them on your watch list. We'll just have to be patient for something to develop. Again, you can always look for that Cody special. That's always a real interesting way to do it, right? There's a reason why Cody likes that quick snapback to the breakout channel, but we also might see some consolidation or, a flag to the 9 over the next week and a half. So I would say that this does warrant being put on a watch list, but I think that's where it has to end for me right now on JB Hunt.
Agree. All right, guys, that's earnings roundup. That's stock talk here. There were a couple other stories in the news that grabbed my attention. Nothing too significant. Space, SPCE canceled another flight. Stock is gapped down. That stock is such a volatile, news-driven nightmare. I'm just a complete stay away from those. From it as a company, in my personal opinion.
I'm down to $10. I like to throw some spec money at it.
Some $10.
I'm going to be Mark on Space. Yeah, I'm 100% with them. I mean, it's such a cool story stock, right? I mean, that is cool. But I'm going to be with Mark on this. Mark, when you are looking to sell the 10s, please send me a message because I am interested. I looked
at the 15s you get in November. I was like, nah, I don't want to pay 15. I want to pay 10.
You want 10? You want to go to Space on a discount.
I feel like the Harlan character on Something About Mary there. No, not 15, 10.
You can't get a good workout in 6 minutes. What's wrong?
Not 15, 10.
Oh, goodness. All right. Last thing we're going to do here today, and we do it each and every week, is on Fridays. We bring Coach Frank on. He runs the Twitter account over at Tackle Trading. He's been doing these chart videos over there as well that are fantastic. We call them Frank's Charts because it's simple, fresh, and clean. You can just get good technical analysis. And Frank, you always bring a handful of companies that you want to share with our team in preparation for the weekend here on the Friday show. What do you got for us today for Frank's Charts?
Yeah, I've got a few. This is going to be the lightest overall week for me because we have 2 weeks of extreme earnings, right? And I think, Matt brought it up last Friday that this is the hardest week of the quarter for new trades, but there's always something, right? There's always something. So I want to start today with Airbnb.
Ooh, okay.
And I really like the way Airbnb has been behaving as of late. of course, we had that rounding bottom. We had that break. We talked about that breakout back in August, that snapback Cody special that happened right after, behaved very, very nicely. Or this past week has ran up to that previous resistance level. And, sometimes resistance is tough, right? But what it's really done for us is it's kind of reset, let us start to think, okay, we could maybe implement some breakout mechanics here on R&B if we take out that resistance level. When you look at Airbnb, I mean, you can pick the resistance level that concerns you, right? It might be the pivot around 193, 194 from back in April. It might be 200 because it's a round number. It might be 210. I mean, it's not a lot of history, right, on Airbnb. I actually like the 200 as a secondary target if we can break through that resistance level. I would like to see it build on a higher low, right? So I'd like to see it break out sooner rather than later. I'd like to see it, let's see that intraday momentum pick right back up after selling at resistance, break us through, work our way back up into either the 194 range, that pivot from April, or into the 200 area is kind of what I'm thinking on Airbnb.
I love the chart. It's an interesting area of the market. Obviously, you're talking reopening. You're talking about people getting out there and doing more bookings and travel and all that kind of stuff. You see it in the chart development. One of the things we've been talking about all week, Frank, is pivot point understanding. And over time, we saw lower pivots, when it was in a downtrend, and you can clearly map out what's happening there from that perspective. Airbnb found a double bottom in the summertime. We have now been putting in higher pivot lows for quite some time now on the daily chart. A little messy at times. It's that kind of company. It can respond to the news, but we've got a clear breakout point. And they had an analyst note on Tuesday. We covered it here on the show, where I think some analysts from Cohen talked about a $220 price target and increased bookings and increased all this kind of stuff, upgraded it to a buy. I like it from a chart perspective. I am not an investor here personally. I don't know enough about the fundamentals behind it. I'm not going to map out an argument there, but I do like what's going on here short term from a chart, trend, pivot point, relationship understanding. Marky, what's your read on this chart?
Man, I liked it a lot better 2 days ago.
When it didn't have the red candle from yesterday.
Give me a weekly chart, because I wouldn't mind a pullback or a breakout here, right? You got that rising 9 on the weekly putting pressure. Eventually something will have to give. The breakout's pretty clean, right? Whenever the breakout does occur. Yeah, I mean, watch list worthy 100%, and probably worth a speculative add in some play. Not tied to any major index. I can see a play on a breakout here. Sure.
And you have about 4 weeks until their earnings report, Frank. I don't know. You've got enough time to map something out. So I think it's worth a watch list. I think the breakout is clean if it happens, and make sure you get it though. You got to get confirmation on those breakouts.
Confirmation. It's only a breakout if it breaks out, right?
Very good. All right, what you got next?
All right, so this one's interesting because we've got the old debate of to wick or not to wick.
Okay.
Right? And that is going to be our friends LAC, Lithium Americas, LAC. These guys can move. They can shake. They're not a boring stock to trade, I will say. So what I like about them is we broke out of resistance here the midweek, right? We took out that previous swing high. We spent basically the last 3 days consolidating. And so if you think about what that looks like on the intraday, it's just trying to figure itself out. So it broke, but didn't want to run. Now it broke out of everything except for that one candle on January 19th.
Yeah. Do you remember what was happening then?
I was trying to remember if there's anything specific with LAC.
I don't remember if it was specific to this company. I would be shocked if it was, now that I know what's going on. That was the GameStop situation. Mid to late January, I believe, so Mark, January 19th or so would have been when the meme stock started really pushing and running. I don't know.
The whole underbelly collapsed heading into that stretch, right? It started collapsing in
maybe this was
early
just
part in mid-February.
While you talk, Frankie, I'm going to try to find it. I'll try to find what that news was.
Yeah, because that I just don't know if I should be worried. We did spend a little bit of time there. It wasn't like a single kick on the 19th.
And the one thing about LAC, when you go to underbelly, there's a lot of underbellies that haven't even sniffing their February highs. Like,
plenty. Yeah.
In fact, all of them almost. Very, very few underbelly stocks are at their February highs. A lot of them just obliterated. LAC, not one of them, right? Lithium in general. This is an area of the market.
This was not an underbelly stock. Stock news on that day. I'm looking into it now. Give you the short version of what I'm digging into. It looks like they had really good news about one of their land management projects that day, that they got access to it and all that kind of stuff. So it was a real fundamental news story.
It was a real news story, and just wasn't able to maintain. Okay, so
gotcha.
So you have relative strength compared to a lot of those other areas. Its strength compared to other high volatility stocks is very impressive.
Yeah, I think that. So is the question, Frank, can you play this little 3-bar breakout at 26, which is very clean, if you're concerned with this day? Is that right?
Exactly. And I think you probably can if you scale in. And I think if you're too concerned with that, you're like, look, if this has anything in it, it's going to take that out. And that's the trade I'll look to make, right? I'll actually wait for it to go. With the way it's developed right now, I think you could set up a trade where you were just a little over 1-to-1 on the risk to reward to that top, to the actual high point there, and then look to add to the position, or you can just try to build that as the trade. I do like the relative strength. I love this little 3-bar dance that we've had at that old resistance level. Just going to come down to, and in a world where there's no earnings, and I've got as many, I probably have like a third as many stocks to choose from today as I usually do. And so that might be a determining factor. You know what? I'm just going to get rid of you, and we'll talk when you break out of that. But I do think it's at least an interesting conversation.
I do as well. And it makes me want to look into the space a little bit. Industrial metals and mining companies, lithium is kind of, one of those underrepresented company perspective. There's not a lot of stocks that trade that are lithium based stocks, but interesting name. I don't know if this would throw me off at all, Frank, if I'm thinking short-term trade. That was a news-based event where there was one day of buyers and sellers who came up and made transactions here. If somebody said, nope, absolutely not, doesn't map out reward to risk to me, I'm going to find something else, I wouldn't argue with them at all.
Sure. Yeah.
Wouldn't try to convince anybody.
I would argue with them. I don't know how you pay any attention to that candlestick. It doesn't mark anything other than an aberration in the chart. It's like the March lows on COVID. It was like that happened last year. It's like, oh, big candle created. That's not support. That's, volatility, this and that. It's an aberration. It's not like you have multiple tests or anything like that at that spot.
It's a good point.
So it's more of just, let's just respect it when we get
if
there.
If you
but
like
not
the
worry
play,
about it.
that would not be a deterring factor.
That shouldn't be that. So
little complex one, but a nice little breakout and good momentum.
Always fun to have those wick debates, right?
Very good.
They're no fun.
Where you can take your wick. Listen, my count's at all-time highs. This market's froggy. You can take those wick debates.
All right, there we go. Listen, I'll roll with that. That's as good of a wick argument as I've ever heard or made. It's always the eye of the beholder, right? As far as that conversation goes. Correct. So interesting. So Mark's on board with that. All right, let's look a couple more here. Let me try to find things that are close enough that we could build right away.
I want some action, Frank. Give me something to do.
All right, let's go to WSC. Will Scott Mobile Mini Holdings.
That's nice.
So we've got, I think, November 4th. So we got some time before earnings. I had that nice consolidation, broke through that here today. Gotta like the entry side of the equation. I've been watching these guys for a breakout really since going back into when they were riding above the 9 at the end of September, and it just took what it took, right? As far as the breakout is concerned, these are all-time highs that we are working with. So from a targeting point of view, there might be a little complexity, but I do think if we kind of just think about how these guys move and where they could head, I do think somewhere in the ballpark of around $35 makes sense for a target area, whether that's, T1 or T2, if you wanted to be much more aggressive. the stop could be an interesting one, right? Because do we go below today's low? Yesterday's low could make some sense. Below the 9 is always a sensible place, in my opinion, for a stop loss. Because we're basically a breakout really is momentum, right? Especially the initial surge. So we do want to have some sort of momentum stop with it. Looking at the trend, and while there's not nearly enough time for this, I mean, the overall trend that they've been on would suggest that these guys are going to $40, give or take. That's way too optimistic, I think, to say it's happening between now and November 4th earnings date. So probably would be more of a position trade with earnings in the way, probably going to have to get out of that. But I do really like these guys as a breakout candidate. And I like that 35 to 36 range as a potential target.
This is an interesting company to me. I've never.
I'm not familiar. I'm reading up on this company
me too.
right now.
It's grabbed my attention too, Mark. I'll tell you what I've found so far. Just literally in the moment you're talking here, Frank, because the chart we'll get to in a second. It's got some really interesting stuff going on there. Recent IPO. Okay. So it IPO'd in 2017, or just before 2018, out of a lot of volatility through a couple of different years, got destroyed during the pandemic, like so many different companies did, especially under, known names, found some support. Now it's developed into an uptrend like many did. It's fired back very beautifully. We're pushing all-time highs here on the weekly. That breakout on the daily is pushing all-time highs. They do rental services and leasing services of like office spaces. So like you're a construction manager and you got to have one of those mobile trailers. So you have your office there on the job site. They can provide it. They also, it looks like they have some kind of storage process with shipping containers as well for industrial, construction, retail, education companies. You'll see things like that, like parked outside of a business. Sometimes maybe they're moving, maybe they're renovating, whatever. And they've got 3,500 or 350,000 portable offices in their fleet. Their sales year over year, Mark, since they've IPO'd have gone up year over year over year. I'm interested in who this company is in general. I'm going to dig more into the fundamentals over the weekend.
Yeah, I know. So am I. I'm curious.
But let's talk about the chart here.
Oh, chart's pretty.
While we're talking about
my only question on the chart is, right, I mean, this thing, like, gosh, I was like, is this a REIT? It, like, the price action is like REIT-esque. Makes me wonder if it is a REIT. Like
it might perform that way. I don't
think they are technically a REIT. If I'm not, I don't believe they are.
Yeah.
But like it, and so it's just like, what was the, like, sometimes when you see like long consolidation patterns, it gets choppy and messy, right? Just because it had ran a lot, that makes sense to me. Looks like you had some cleaner breaks at this, post-election. I mean, this is a pretty pattern. It's been a long time since you had a pattern this pretty on this stock. And it looks in the past when you had pretty patterns, it responded, pretty technically oriented. So, like, listen, from a trading point of view, like, shoot, I don't know
good
how
find.
you can say no.
I like it, Frank. Very good find. Thanks for bringing this one to the show, because I'm going to dig into more than just the technicals on that one. I have some intrigue. I'll just say that intrigue.
Here. Right. I like it. I like it. That's what it's what you
Tim
like.
Wants to buy some shares just so he can call it his mini me. Like, my mini me, it's powering.
I respect it. And that does sound like a very Tim reason to buy those shares. I do.
He saw mini and he's like, I got to have some of this.
Oh, that's fine. That's
I like it. All right. I don't know what you guys are going to think about this one. I like the way Groupon is developing for reversal, though. GRPN.
Okay.
I mean, Groupon has been out of favor for a while. That's maybe a nice way to put it, right? It's been beaten down very, very significantly over much of this year. A couple of things are standing out to me, and it's still got work to do. But we've got this little reverse head and shoulders potentially, right? That has developed. We finally are at least trying to turn around our life. We've got a higher low that's trying to develop. We did break through the 50-day moving average today, which is a good thing, but the signal itself is going to be the breakout above 25. So this would be one that's just too far away to be, fit into the reports, right, for our trading rules.
Yeah, and the signal also, I immediately went, because this is a beautiful reversal pattern developing. That 9 weekly
it'll
is
get us
right
above
there
that
at
9
25 right now.
Exactly. And so
this thing is very beautiful. This is very, very beautiful from a reversal standpoint, right? There's plenty of chance to send it lower. Just no energy to send it lower.
Yep. Just the big if caveat, right? If it can break above those pivots, if it can break above that 9 EMA, and this is where it gets exciting. This is what I really like about it. And there's this big open window, right? Basically, there's no resistance that scares me until the 20 weekly, which is, around $31. Will probably be a little bit lower when that time comes. But we have this really clear window of trade potential, right? Doesn't necessarily mean that has to be the target. I try to always clarify that, but I always want big open windows to work within, right? Because there's no great technical reason to sell. Well, it's less likely to sell. Won't mean it can't sell, but if there's not a great reason for someone not to do it, then they are less likely to do it. So this is, I'm with you 100%, Mark. We do need to take out that 9 that lines up with the resistance. That's going to put us just approximately around that $25 marker. We're a little bit further away than we need to be to officially, be in the tackle trading scouting reports, which is fine. I'll be keeping an eye on it. I'm pretty sure if it breaks out, I'll probably be throwing it on Twitter to remind anybody. But I'm with you, Mark. I really like that reversal characteristics that we're seeing. We just have to win a big fight. I mean, you get excited and you map the trade out and you look at the upside and all of that fun stuff. But there is a very reasonable chance that we don't break that 9 weekly, right, Mark? We both know how that battle can play out.
That thing just sometimes it just takes so long.
Yeah, it's got a barrier to change here, and that's that resistance point at 25, like you've highlighted here, Frank. But that's also kind of what I like in a reversal type trade. I want to know not only just reversal, any real swing trade. I like to know exactly where my trigger is, because then I don't have to do anything before
this thing has to go on a watch list, and I will play it. Maybe it doesn't trigger for like 6 weeks, right?
Right. It could easily be one of those.
But you got room to run. One of the things I hate is you get like FUBU. This happened to me on FUBU. The last couple of weeks is you start getting down and I get excited. I'm like, I'm going to get a big sell-off. And then it never went anywhere, right? It immediately stopped and then came back up and it's like, screw it. Well, the Groupon thing was a huge sell-off, right? And it creates room that if you do get a momentum signal, you don't have any resistance for a while. And so your risk reward is really pretty in these situations.
Yep.
It can be really pretty in these situations. I'm definitely going to dive in from a fundamental standpoint on Groupon this weekend to see how convicted, if I can make a conviction case, because the pattern's awesome.
I'll save you some time. It's garbage.
Dude, you don't know that. You're just saying that because, it doesn't have mini in it.
Sales year over year have been dropping for 7 years in a row.
But listen, behind every sales
no assets.
There can be a turnaround story. I'm not saying I don't know crap about it right now. I haven't dived into it, but I'm just saying, don't be that guy.
Well, I don't think the reason you'd map out a trade here is for fundamentals anyway. You see that the technical analysis, right? Maybe there is something long term.
That's where my head.
I understand.
Yeah, it would. The fundamental analysis would only be potential icing on the cake for me. I wouldn't even look into it. I only know if you guys told me.
I don't trade unless there's a fundamental story I can get behind as well. So, but that's just me.
No, and that's the difference between personality and rules for your system, Mark. And I think that highlights a very important thing for anybody out there watching is you can kick something onto a watch list, but it has to satisfy your own personal rules in the market and in your trading account. Now,
okay to pass on things.
Right? One more, Frank?
Yeah, let's do one more. This one is this is for Coach Greg. He's brought up Micron a lot. We're going to talk a bear on Micron. I think he had them in Trade Masters when he went against you. He needed to do better. It wasn't enough, Greg. But I still like where your head was at, sir. And what I like about these guys is cheap risk bear. We broke down big volume, big break, rally back into that 9 EMA, which happens to line back up with that old support level. Very cheap trade. Basically entry below today's low, stop loss right above that 9. That gives us today's high, the 9 EMA, and potentially the floor itself. We're, about 1.5 to 1 on the risk reward ratio, just if we can work our way back down to that support level. And then, there's a big window, right? I'm not suggesting that we're going to $60, but Micron does not have a lot of support. Until we get into, that old breakout point at around $60. So just a a good risk reward, cheap risk, probably a good way to put it, cheap risk bear on Micron, playing basically saying, hey, look, this breakdown is going to hold. The nine's going to slap us down. We've got room back to the previous level of support. And if we can take that level out, there is a lot of downside for the stock, which would be upside for our bearish trade.
Yeah. Marky, what are your thoughts on Micron here? Obviously, the setup is there. You got a little bear flag developing, breakdown, bear flag back into old support. It's got lots of room all the way down to 60, which is where like the weekly 200 period moving averages, also old resistance. Is there room here for you to map out a bearish trade on Micron?
Dude, I don't think I like bearish trades. What are you talking about?
So you didn't vote for Greg on Wednesday. All right. I got you. I got you.
Listen. I get bearish traders. I swear bearish traders are just bullish traders that are bored. You know,
there might be some truth to that.
Listen, I'm not excited. Like, I love Micron. If it ever dips deeper, I'll buy some shares. Nobody's running out to buy Micron right now. There's a lot of negative, just everything around the space. So if you were to take a bearish trade, I know bulls aren't excited about Micron. So it's as good a place as any.
I think exactly where my head's at with it as well. There's no real excitement around the company after it fell to the 200 period moving average. We've started seeing downgrades out of Goldman Sachs and different analysts for 2 months now. So the company definitely fallen out of favor. It's bearish right now.
Yeah, there's no juice here right now. One day, but you know.
One day, who knows when that day is. I agree. I mean, it's a lot more exciting I'm the bull guy, right? I much rather talk about breakdowns, but you always have to have at least one or two bearish ideas in your back pocket in case you need them, right?
I agree.
No.
All right, guys, Mark doesn't agree. No, he doesn't. He's a perma bull, and there's nothing wrong with that, Marky. All right, let's start wrapping up the show here for a great week of content here at Tackle Trading. We really enjoyed coming in and joining Team Tackle out there, talking about these earnings as we, get the reports day by day by day, watching these market responses. And I just came back to the intraday chart on the S&P 500, Frankie, because frankly, it's just been a juggernaut since Wednesday when we put in the bottoming pattern, broke out and took off. Frank, you first. Final thoughts for the team out there. Final thoughts on the market this week.
Yeah, I mean, make sure you're staying on top of your earnings, right? Double check to make sure you got time. Make sure you got a game plan. Make sure you don't sit through a pullback only to have to get out the day before earnings. I have found that most of us as traders do a good job of checking the earnings date before we get in, getting out before the earnings date. But where we get into the most trouble is we sit through a pullback and then we just run out of time. So it will change, at least for me, the way I'm going to move my stop loss. I'm going to be a little bit more aggressive to move that stop loss, a little bit quicker to walk out of trades that have their earnings coming up, because I don't want to get stuck in a pullback. So be mindful of how those earnings are impacting your trades, your directional trades in particular. Follow your rules and do your thing. I'll see you on Friday.
100%. Mark, final thoughts from you.
Yeah, listen, I think you want to be a little froggy here, but I think you want to be froggy in select areas. I think you want to avoid defensives. Like, I mean, when you look at the price action today, Staples down a little bit, utilities down a little bit, REITs down a smidge, healthcare doing all right. I just like, I think if you're going to take shots, you take shots that this market's going to rebound and show a lot of strength. I think that's tech. I think that's comm. I think that's energy. I think that's finance, materials and industrials. Just a little worried about earnings on those front because they're front line, not materials, but industrials are front line in a lot of that. Mm-hmm. So I think I want to avoid that area, but I think you take it in more aggressive areas and some of those running areas of finance. I don't know how you don't get some financial exposure, but it's like everything. I think I gave some advice at the start of the week. I give some advice on my trading lab, give the same advice today. I think this is, don't be too greedy. Don't be too fearful. Try to find that balance in that market right now. And if you can find that fine line between greed and fear in this market, I think it's going to treat you decently, for the rest of the year. Mm-hmm. And if this run is real, there's going to be plenty of opportunities, but don't be afraid to get a little piece of it in the coming days, especially as the patterns solidify.
All right, man. Thank you for your thoughts and your analysis here today. It really helps our team out there. Each and every day we come to the halftime show. I know a lot of people out there, really rely on the coaches, the community, and all that kind of stuff to understand what's happening out there in the market. So appreciate you guys. Couple of last things as we wrap up our week here on our show, but we're not done with the week at Tackle Trading. Over the weekend, several things I want you guys to do out there is number one, if you're not yet a pro member at Tackle Trading, head to the website. Grab the link in the description below of any YouTube video we have and start your trial right here. Okay. Just come to the website, start a 15-day pro trial and join us on the back end, join our daily webinars, join our traders lounges, get the analysis from the coaches and get our weekend reports as well. We're going to be building watch list for bulls and bears heading into the weekend on the stock and the options report. So come and join us with a 15-day trial. If you have time tonight and you want to learn from a wonderful investor, wonderful educator, wonderful trader, come and join Coach Emily right on the events calendar at Tackle Trading. If you highlight the Trade Center, head to the events calendar. And this is one that you should absolutely invite somebody to. If you are a part of the Women in Trading, mastermind group, you've been coming all the time, you have somebody in your life that you're like, you know what, they could use financial education. They could use proper mindset towards investing. Invite them to the Women in Trading group tonight. It's going to be tonight, 8:30 p.m. Eastern time. Coach Emily will open up the webinar room and have a wonderful conversation. So do not miss that. And then keep an eye out for our newsletters and our reports as they get published throughout the weekend. Until then, guys, have a wonderful rest of your weekend. We will see you on Monday when we're back with the halftime report. Peace. In 10.